All right, let's talk about car loans because chances are if you're watching this, you're probably paying a lot for yours. So you bought a car a while ago and at first it seemed like a great deal. The dealership was hyping you up, the car smelled new, and you were already picturing showing it off to your friends and family to get their reaction. I know, I've been there. But now, maybe your interest rate's too high, maybe your monthly payment is eating up your paycheck, or maybe you just found out that your friend who has the exact same car is paying way less than you. And now you're sitting there, wait, did I get scammed? If that sounds like you, don't worry. It happens to a lot of people. They sign car loans not knowing that they could have got a better deal. But here's the good news. You don't have to stay stuck with that bad deal. There's a way to lower your interest rate, cut down that monthly payment, and actually save some money. It's called refinancing. You can refinance and save possibly hundreds or even thousands of dollars. But before you go and apply for a new loan, just because I said the word save more money, you have to understand how it works. Because if you do it wrong, you could end up paying a lot more in the long run. So in this video, I'm breaking down everything you need to know about refinancing your car loan step by step. So let's get into it. All right, so let's start with the basics. Refinancing your car loan is basically like breaking up with your old lender and getting into a new relationship with a new lender. Think about your original loan as your toxic ex. It started off great, but later on you realized you were getting played. And you do what anyone would do, you leave. Let me explain. When you first bought your car, you took a loan either from a bank, a credit union, or even the dealership itself. And unless you had perfect credit, that loan either came with a high interest rate, a long loan term, or some extra fees. Basically, you were so hyped about getting a new car that you didn't realize you might be overpaying. Refinancing is basically when you take out a new loan to get a lower interest rate or a lower monthly payment. It's like switching over from a bad deal to a better deal, just to keep it simple. To break it down in its simplest form, your old lender, they were overcharging you. And your new lender, they're offering you a lower interest rate and a lower monthly payment. And here's how it works. You apply for a new car loan, but with a different lender. If you get approved, the new lender pays off your old loan completely. And now you start making payments to that new lender, but with better terms. So you get to keep the same car, but you have a new loan with a lower monthly payment or a lower interest rate, or even both. But don't get too excited because refinancing only makes sense in certain situations. Let's talk about when it actually makes sense. When should you refinance? Now, refinancing isn't for everyone. Just because it sounds like a good idea doesn't mean it is. Here are a few situations where refinancing does make sense. The first one is going to be when interest rates have dropped. Let's say you got your car loan 2 years ago when interest rates are higher. If interest rates have dropped, now might be a better time that you can get a lower interest rate, which means less money going to the bank and more money in your pocket. Number two is going to be if your credit score has went up. If your credit score was mid when you originally got your loan, chances are you got hit with a high interest rate. But you've been making payments on time, paying off your debt, and just being responsible, so your credit score has probably increased since then. And a higher credit score means better loan offers. If you refinance with a better credit score, you can get a lower interest rate and pay way less over time. Number three is going to be if your loan terms are just simply trash. Some loans come with weird terms like high interest, extra fees, and just weird conditions that don't make sense. If your loan came from a sketchy dealership finance company, they probably raised your interest rate just because they could. Refinancing could help you get a legit deal from a bank or a credit union. Number four is if you need a lower monthly payment. Maybe your financial situation has changed, like you took on new expenses, you lost your job, lost your source of income, or you just need some breathing room. Refinancing can help spread out your loan over a longer term, meaning a lower monthly payment. But be careful because this can increase the interest that you pay over time. So why is that? Refinancing can help you lower your monthly car payment by stretching out your loan. So for example, you have a 4-year loan, it can stretch it out into a 6-year loan. It sounds great since the smaller monthly payments mean more money in your pocket monthly, right? But there's a catch. The longer you take to pay off the loan, the more interest you pay in the long run. And this is because interest builds up over time. Think of it like this. You borrow $10 from your friend and they charge you $1 of interest every year it takes you to pay them back. If you pay them back in 1 year, you only owe $1. So 10 plus 1, right? If you pay them back in 3 years, you owe $3. 10 plus 3. Make sense? See how the longer you take, the more interest, aka money, you pay over time. And that's exactly what happens with a car loan when you stretch the payment out over a few years. So yes, refinancing can help you pay less money monthly, but it could make you pay more money in the long run if you're not careful. That's why you should always check how much extra interest you'll be paying before you refinance for a longer term. In a little bit, I'll show you how to check if it's worth it for you. But first, let's talk about when not to refinance. Sometimes refinancing isn't a good idea. Here are some red flags. Number 1, your car is almost paid off. If you only have a year or two left on your car loan, refinancing may not be worth it because of the extra fees that come along with a new loan. Here are a few of them. Loan origination fees. Some lenders charge a processing fee just for starting a new loan. This can be anywhere from $100 to a few $100s depending on the lender. The next one's going to be title transfer fees. When you refinance, the new lender takes over the loan, which means the title has to be transferred over to them. And this process usually comes with a state fee that could be up to $50 to $100 depending on where you live. The last one's going to be a prepayment penalty. Some lenders actually charge you a fee for paying off your loan early. Yeah, I know it sounds crazy, but it happens. This could be anything. It could be a percentage of your remaining balance, or it could just be a flat fee. I always recommend to check for hidden fees before making a decision. Okay, so now let's talk about how you can check if refinancing is actually worth your time. Because just because you can refinance doesn't mean you should. Here's a quick test to find out. Step number 1 is to check out your current loan information. You want to ask yourself these 3 questions. What's your current interest rate? If it's above 6 to 7%, you're probably overpaying. What's your monthly payment? If it makes you consider your life choices, we need to fix that. And the third one is, how much do you owe left on your car? If you're already almost done paying it off, refinancing may not be worth it. Step number 2 is going to be to look at your credit score. If your credit score has jumped since you got your loan, you could get a better rate. But if your score is still mid and not so good, you might want to hold off a bit and build up your credit first before you start thinking about refinancing. Step number 3 is to compare new loan offers. You can do this by using pre-qualification tools that allow a soft credit check or soft credit pool. Some examples of these are LendingTree or Credit Karma. But do not apply for multiple loans at once because that is a hard pool and your credit will feel it. If you pass the test and the numbers make sense, refinancing could be a great option. But before you refinance, it's important to check your overall situation. A tool like Rocket Money can help you track your spending, spot hidden fees, and even negotiate for lower bills. So you can know exactly where your money is going before making a decision. All right, so you're going to try to refinance. How do you get the best deal? You have to be careful because this is where a lot of people mess up. Step 1 is you want to shop around. Don't just use your current bank. Check out credit unions, check out lenders, and other local banks around you. Usually credit unions will give you a better rate because they don't have to make investors rich. Step number 2 is going to be to negotiate. If you get a good offer from one lender, take it to another lender and ask them if they'd be able to beat this. And if they hesitate, you can hit them with something like this. That's crazy because this bank is actually offering me a lower rate. Now that might not always work, but it's definitely worth a shot. You can also say, I had some friends who tried this and they got a lower rate with their bank that they've been with for a long time. Step number 3 is to look for hidden fees. Like I said a little bit earlier, some lenders sneak in prepayment penalty fees for paying off your loan early. And something else to look out for is origination fees. Some places charge you just for taking out a new loan. If you can avoid those and lock in a low interest deal, I would say refinancing is a solid choice. All right, let's say you found a great refinancing deal. What happens next? First, you're going to apply for a new loan. You'll need a few things like your current loan, your credit score, and your income info. And then you'll get approved or not based on all that information. Now, this can be exciting or annoying because some lenders are fast while others act like they're on a vacation in Cancun. But I would say try to do it on a weekday for better chances of a quicker response. If approved, your new lender pays off your old loan, so your old loan disappears and now you have a new one. Then you start making payments on your new loan with a lower interest, lower stress, and more money in your pocket. So refinancing is one of the easiest ways to save money on your car loan, but only if you do it the right way. If your interest rate is high, your credit score has improved, or you need lower monthly payments, refinancing could be a great option for you. But always check your numbers, compare all the options, and read the fine print of the new loan. If this helped you gain a better understanding of refinancing, hit that like button and subscribe for more chill breakdowns of complex topics like this to help you make smarter financial decisions. Thanks for hanging out with me, Alex, aka your money friend. I'll catch you in the next one. Peace.